Good evening, everyone. This is Carbon Biking, and today we are presenting you our business plan presentation. This presentation is going to be presented by Ashley, Alan, Edgar, Valentine, and Violetta.
So I will be starting with a quick overview on our company, Carbon by King. Our company is focused on speed in the mountain market segment. We have entered Amsterdam with a strategy centered on quality, innovation, and long-term growth. We've achieved 26% market share and ranked first overall in Q2 through strong manufacturing performance. We have faced production stockouts due to higher than expected demand, leading to plans for expanded capacity and improved forecasting. Our future strategy focuses on increasing production, strengthening marketing, and sustaining profitable growth. Next slide, please. So our financial and market performance, in regards to our financial performance, we started off with a loss of 196,000 due to the initial investment in our store setup and our market entry. Then in our Q2, our revenue increased to 285,000, but had a 427 and 928 net loss as we continued to invest in production and marketing. In Q3, we finally had our first net profit of 48,238 and 238. In regards to our market performance, we've generated 632 total bike sales, and we were also ranked number one overall with a 25.63% market share. Next slide, please.
Current situation. Customer demand is becoming more stable compared with the first 3 quarters. Adequate inventory and production capacity to avoid stock outs and lost sales. Customer satisfaction according to the demand, Zoom 2, 334, Trekker 2, 156, and Outlander 103.
Hello, my name is Edgar. I'm the sales VP, and our company is Carbon Biking. And if we are on the top, we are the kings. Um, the other ones that are below us are the competitors, and slide represents how our competition is doing so far. You can see that we started out basically, like Ashley mentioned it, on Amsterdam. We have a lot of competition over there. And next we proceed with New York, and we can see that everyone else jump into that market because that's the biggest one. And we wanted to first start it out as a test market on Amsterdam. Once we got everything together, we jump into a bigger market that is New York. And you can see that our numbers are not that far from the competition and production capacity. Slightly different right there, but nothing crazy. And we're basically doing really well. I would explain a little bit more on the sales slide, how we're doing compared to the rest of the competition. Next one, please. On this one, is basically explaining on quarter 2. You can see market down with the yellow square that our strengths on the quarter 2, there were no our company was doing really well compared to the other ones. And Sony Cycles was like the strongest one on quarter 2. But you compare that to quarter 3, you can see that Sony Cycles went down and Summit Cycles went up, and we are not doing really bad compared to the top one that is Summit Cycles. Our company is growing well, is doing fine compared to the rest of the competition. Let's go to the next one, please. And on this one, you can see that by quarter 3, our company is doing so well that basically we don't have weakness. We are doing really well. Our company is growing very steady. It's a good pace. And we're projecting that we're gonna grow more and be really top competitor on our market. Next, please.
Hi, everyone. My name is Alan Abitra, and I serve as the Vice President of Human Resources and Business Analytics for Carbon Bike King. Looking at our slides, based on our financial performance and market analysis, Carbon Bike King has established a strong foundation for future growth. Financially, we returned to profitability while maintaining a gross margin of 61.8% and operating without outstanding debt. These results demonstrate that our company is generating healthy returns while maintaining financial discipline. From a competitive standpoint, we built a strong presence in the mountain and speed market segments through successful product introductions and a continued focus on customer-driven innovation. At the same time, our business analytics identified several areas requiring attention. Production capacity limited our ability to fully meet customer demand. The recreation segment underperformed, and several long-term investments temporarily reduced short-term profitability. And rather than viewing these setbacks, we viewed them as opportunities by increasing production capacity, continuing global expansion, and improving operational efficiency. We believe Carbon Bike King is well positioned to strengthen its market position and deliver greater value to our shareholders.
Hello, my name is Valentin Reyes. I'm the VP of Marketing. And so I wanted to start off with some of our threats and opportunities that we're going to be facing in Q4 through Q6. So I believe price elasticity and the consumer's pocketbook is going to be one of our main issues moving forward. The North American markets and the European markets haven't recovered as quickly as they wanted to. And so people are a little more price conscious. So moving forward, we will be looking at our competitors' prices and see how we can undercut them in certain instances. Um, Environmental implications of opening a plant in Bangalore. There was toxic emissions that were detected by environmental groups. So that's something we're going to have to take a look at and see where we can adjust our production in that country to lower our emissions in that region. And then looking back at Q3, we did have the Trekker 2, which was one of our mountain bikes that we put out. And it has low brand review, meaning that customers aren't really flocking towards that brand of ours. And so moving forward through Q4 through Q6, we will be making minor adjustments to the brand and to our advertising to see if that helps to boost up our brand review numbers. And then loss of income from discontinuing recreational bike brands. We're not discontinuing them, but we just aren't putting our resources towards them anymore to create new ad buys and ad campaigns. We're going to focus our resources on our mountain and our speed bike sectors. So I think if anything, we just need to make sure that having those bikes for sale is not going to impact our sales going forward. Some of the opportunities that we have, though, moving forward is social media marketing growth. So we finally are able to have a presence in our social media. And by investing in that between Q4 and Q6, we plan to see an improvement in demand up from, I mean, nothing to at least 1.5% to 2% growth in sales. We're going to be investing in research and development, increasing our ad spending in the markets that are actually looking at our bikes. We're going to be expanding production and brands moving forward in Q5 and Q6. And we're planning to expand into new markets such as Bangalore. And we're going to invest in consumer, company social responsibility. Next. So moving forward, our marketing strategy for our mountain bike segment through Q4, 5, and 6, we're going to be investing, like I said, in research and development. We will be making an investment in enriched carbon fiber. It's going to be lighter and stronger, and that should take effect in Q5. We're going to be investing in our social media marketing. In Q4, we've have a budget of $6,000. In Q5, we're bumping that up to 10,000, and then in Q6, we're topping that out at $14,000. This will be an increase of 1.7% in demand improvement in Q4 to over 2% in Q6. We're going to increase and consolidate ad buying in our world markets. In Q4, we're increasing our ad inserts to 5 inserts in the biking magazines. And in Q5, we're going to bump that up to 8. Q6, we're going to move that into 10. And then, yeah, we're only placing ads in our biking magazines because that's where our customer base is looking. And then in Q5, we're going to be introducing a new brand, the Ranger. We're going to be using that new and rich carbon fiber material that we've invested in research and development. And so that should give us an edge over competition who isn't going to invest in the same ways that we are. We're also bidding for paid search engine marketing. So the industry average bid is 2.4, and we're going to start out with a bid of 4.0 in Q4. And we're going to increase our ad budget in Q5 to 6,000 and in Q6 to 8,000. And then for Q5 and 6, we'll evaluate and adjust our bid for our paid search engine marketing. And then lastly, we're going to increase on our organic search engine marketing by modifying our advertising campaign, Rough Rider, in Q4. And then in Q5, we're going to introduce a new ad campaign to go along with our new brand, the Ranger, and it'll be called Take on the Outdoors. And then in Q6, we'll just modify that both of our ad campaigns and hope to increase our click-through rate. Next. Our marketing strategy continued. It'll be for our speed bike segment through Q4 through Q6. So we will also be investing in research and development for our speed bike segment. This will include new racing tires and an 11 speed gear. We're going to be investing again in social media marketing. The same as with our mountain bike segment, we will be increasing the budget over the next couple quarters to over $14,000, which we should see a return of 2% in demand improvement. We're also going to increase our ad buying in our world markets for our speed bike segment as well. So the advertisements will bump up the inserts in biking magazines. So we're also going to be introducing in Q5 the new speed bike, the Vortex. It'll have the improved racing tires that we developed in research and development and the new 11 speed gears, making it lighter and faster and easier to shift between the gears. Same as with our mountain bike segment, we will be increasing our our paid search engine marketing. The industry average is around 1.95, and our initial bid will be 3.0. Hopefully, that helps us beat out the competition and we can get at the very top of the web pages. And we'll be increasing our ad budget in Q5 to 6,000 and in Q6 to 8,000. And then we're also going to increase our organic search engine marketing. We're modifying our advertising campaign for Be First in Q4. Q5 will introduce a new ad campaign for the Vortex, all gas, no brake. And then in Q6, we'll modify that ad campaign and hopefully we'll increase our click-through rate. Next.
So as I explained before, we started out with Amsterdam, jumping into New York, then Bangalore. On the quarter 4, gonna be Bangalore, but we're gonna postpone Rio de Janeiro because at the beginning we have a big constraint that it was we underestimated the demand. The demand was bigger than our production, and we had some ill will that it was shown before. And now our strategy is to maximize profits and try to produce more to be able to get the maximum money for our production. Let's go to the next one, please. So basically, what we're gonna be doing on our tactics is for quarter 4, we're gonna be improving our bikes to Tracker 3 and Zoom 3. But as was mentioned before, we're gonna invest a lot on our main product. Our top priority segment is speed. So we're going to invest on the best frame possible because according to the memos that we got, the information that we got, the feedback from the customers is that some of the frames are getting damaged while using, especially on the mountain. So we're going to invest a lot on the frames. Besides that, we're going to be investing on the best racing bike tires, pardon me, and the new speed gear. That's gonna give us the best speed bike that we can get, and that's gonna situate us on the top on that category, on that segment. And as you can see on quarter 5, we're gonna launch Vortex. That's gonna be our top speed bike. We're still gonna be selling the previous models because they're gonna be a little bit cheaper. They're gonna be still an option for all customers. And you can see that on the quarter 5, we're going to be investing. We already have the stronger frame and lighter frame. Now we're going to be investing on the special tires for mountain bikes and the handlebar specialized for mountain bikes as well. That's going to give us the best mountain bike that we can put on the market, and that's gonna be the Ranger that we're gonna launch on quarter 6. So those are the tactics that we're gonna be doing. And as I mentioned before, you can see that we're attempting to launch on Rio de Janeiro a new store on quarter 6 as well. But we still have to see how we're gonna play everything out because we're investing a lot on our product and on production, since that has been the biggest constraint that we have had so far. You can see that where it says available fixed capacity for quarter 6, it's gonna be almost double, more than double. You can see quarter 4 is 2,600, and we're gonna go up to like 6,000. So that's a big jump. We're almost doubling the production because if we're gonna launch the best bike, we're gonna be able to actually sell it and get the most that we get out of that business. And then when we launch the next on the next quarter, the new mountain bike, the Ranger, we're gonna be increasing even more the production. With all the marketing that we're gonna putting out and all the investment that we're doing, we're expecting get a lot of revenue and profits. Let's go to the next one, please.
All right. Snapshots of our human resource strategy for quarters 4 through 6. Looking ahead, our human resource strategy focuses on building a workforce capable of supporting Carbon Bike King's continued expansion. As the team member responsible for human resources, I reviewed our projected growth plans and recommended HR decisions that would support our long-term business objectives. After discussing these recommendations as a team, we agreed that investing in our employees would help support both our manufacturing and market expansion strategies. So our first priority was talent acquisition, as we plan to expand into additional markets and increase production capacity. We recognize the need to recruit employees who could support future growth while developing the next generation of leaders within our organization. And our second priority was employee development. We continued investing in employee training, engagement, and leadership development because a skilled workforce improves productivity and prepares employees for greater responsibilities as the company continues to grow. And finally, our employee retention remained an important part of our strategy. We continued offering competitive compensation and benefits to retain productive employees while supporting workforce stability. We believe these human resources decisions support increased productivity, organizational expansion, and the long-term success of Carbon Bike King.
Manufacturing strategy. Operating capacity, we have the goal that is to produce a level that meet the demand while maintaining high utilization and minimizing excess inventory and overtime costs. The overtime use strategical to cover the demand peak and avoid stock outs. maximum overtime, max hours per day, increase variable costs, and impact workers' productivity due to fatigue. Monitor overtime daily and adjust the production schedule as need. In production, we simulate multiple scenarios each quarter to evaluate production level, overtime use, workforce size and productivity, impact on cost, service level, and inventory. The plan is maximize profit while meeting customer demand and operating capacity constraints. Fixed capacity include equipment, facilities, and baseline labor. Permanent capacity, but consider decisions of expansion and contraction. The focus is to maximize the efficiency of existing resource, evaluate expansion in future quarters based on demand, growth, and profitability. Next, please.
Our financial strategy. The objective is to build long-term profitability through disciplined investment and cost management. In order to do so, our key strategies include finance growth using internally generated funds while avoiding unnecessary debt. It also includes investing in production capacity and inventory to meet increasing customer demand. And lastly, control operating and manufacturing costs to improve cash flow. Next slide, please. So our financial highlights. In regards to our cash flow, we started off with a negative cash flow during our Q1 through Q2 due to the investments we made in production capacity, inventory, and in market expansion. Our cash flow improved in Q3 as sales increased and operations became profitable. There's a snapshot of our income statement to the right side where you can see where that revenue increased from $285,400 in Q2 to then $899,300 in Q3. Startup losses in Q1 and Q2 reflected investments in marketing, production, and expansion. We then achieved, you can see on the snapshot on the right, that we achieved our net income of $48,238 in Q3, making our company's first profitable quarter. In regards to our balance sheet, you can see that assets increased through investments in production, equipment, and inventory. Equity strengthened as the company transitioned to profitability, and it maintained a solid financial position while supporting future expansion. Next slide.
So our snapshot of our tactical plan. Our tactical plan brings together the decisions our team implemented throughout all 6 quarters of the simulation. Rather than reviewing every decision line by line, this slide highlights the major initiatives that guided our overall business strategy. While the marketplace tactical plan included at the end of our presentation provides a complete decision summary, first, we expanded in the key global markets to increase customer reach and strengthen our market presence, including Amsterdam, New York City, Bangalore, and planned expansion into Rio de Janeiro. Second, we invested in product strategy and innovation by introducing new product lines, improving existing products, and enhancing product features based on customer demands. Operational excellence remained a major focus, so we increased manufacturing capacity, invested in quality improvements and system enhancement, and aligned our workforce with anticipated demand. And finally, every tactical decision supported one common objective: increasing long-term shareholder value. Although several investments reduce short-term profitability, they position Carbon Biking for sustainable growth, stronger operational performance, and a lasting competitive advantage. So our tactical plan brings together every aspect of our business strategy, from our people and products to our operations and long-term growth objectives. The marketplace tactical plan shown in the appendix summarizes the detailed decisions that supported these initiatives throughout the 6-quarter simulation. Thank you, and I'll now turn the presentation over to Val for our conclusion and final recommendations.
Hello. In conclusion, Carbon Biking will continue to grow our speed and mountain segments. We're going to work towards becoming eco-friendly in all of our markets. We're going to take care of our workers and our shareholders, and we're going to hope to lead the industry soon. Thank you.